everyone. My name is MaryKate Bullen. I'm Director of Sustainability and ESG with Forest Investment Associates. Super excited to have this panel with you. A few words just to kick off. In this session, we're not going to operate a live Q&A from this room, but we want your questions. So don't take that as a don't interact. Instead, please go online onto the app or onto the browser version and use the Q&A there to submit your question. If you can't do that, find a friend, and they'll help you out with it, because we do want your questions. We're going to leave time for it, and it'll be super awkward if there are none submitted. So please help us out with that. All right, so with that, onto NBS at scale, why large corporates should think bigger. There's been a lot of big thoughts already today, so the idea of going even bigger is a pretty exciting one. And when I thought about what to say to kick off this panel, because I'm going to be real brief and let it focus on these folks, I was up in my room enjoying the view last night, and my mother Skypes me, because that's how she still contacts me. And she says, so what are you in New York for? And I sent her a conference link, and she said, oh, you're on a panel. And I was like, yeah, we got a panel. She said, what's it about? And she reads the thing, and then she comes back and says, what's NBS? And I think was in a pretty optimistic mood, because rather than say, oof, 15 years on, my mother is like the one person who will Google a recorded presentation that I give and watch it. So thank you for recording these, Warren. She watches these things, and I thought, okay, 15 years on, and she says, what's NBS? And then I thought, aha, this is not the problem. This is the opportunity. So what if corporates thought bigger? So that my mom, your aunt, your 10-year-old nephew knew what we meant when we said nature-based solutions, because we are talking in code, and someone mentioned the acronyms earlier today. It's absolutely its own little world. But what if across the river, when we went to Times Square, corporates were showing their nature-positive action on those billboards? What if Wall Street was, had its biodiversity ticker? What happens when corporates think big and everybody knows what the heck we're talking about with nature-based solutions? So I'm just going to put that out there as a little frame. That's kind of my personal wish, that we get to a point where even my mom goes, what's NBS? I think the truth is I taught her NCS instead of NBS, and we are literally thinking bigger. It's not just climate, it's also biodiversity, it's also water, it's also all of the other services that nature provides. So to help us dive into that, we've got a great panel here today. So directly to my right, we have Eric Cooperstrom, Managing Director of Impact Investing in NCS at Manulife Investment Management. Next to him, we've got Juliana Granados, thanks for attending, Executive Director, Investing with Impact at Morgan Stanley. Then we've got, sorry, you're out of order on my paper, but Uti Agarwal, apologies. And you're with BP, and you're America's carbon originator. Right. See, I do have it. And then we have attending from Salesforce, Director of Climate Finance Innovation, Rahul Barua. And lastly but not least, Alejandro Diaz from Commonland. So these are the folks who've been nature-based solutions pioneers, investors, project developers, advisors for years. So on to that, we're going to explain why we think corporates should think bigger and how they might actually do that. All right, so with that, first question I'm going to pin over to you, Eric, since you're right here. As I just said, folks on this stage have been around land use and nature-based solution strategies for ages now. We have hoped, this is not the first time I hoped that people would know what nature-based solutions are, that we would get natural capital strategies at scale. We all want to see this happen. But what do you see as some actual tangible ways that we can move investors and corporates forward to raise the bar on climate and nature?
Yeah. Thank you, Mary-Kate, and thank you everyone here and online, and to the conference organizers, this amazing panel. So I'm really here wearing two hats. So, one, I'm an employee at Manulife, which is the largest insurance company in Canada, so we're a big corporate. We've made a net zero commitment. We're working with the Science Based Targets Initiative as well. And in my day job, I work for our timber and agriculture business, where we're the largest natural capital investor and manager in the world. And in particular, we're providing investors with solutions like our Forest Climate Fund that we just launched, to invest in diversified forestry assets and really target high-quality carbon sequestration and crediting. And just to set the stage, what we're seeing has been already mentioned. I'm sure, we've seen a lot of great commitments and momentum in the carbon markets and on the biodiversity side. The UN Race to Zero has over 8,000 corporates that have committed to net zero. We've got the COP in Montreal that just happened on the biodiversity side. And, for carbon markets, which is the most established, ecosystem services market, last year we saw a pullback, right? We saw a 10% reduction in demand represented by retirements. And that's based on a number of different factors. We've had geopolitical issues in the Russian invasion of the Ukraine. We've had macroeconomic instability and recession fears. We've had inflation. Now we've had SVB. And that's still no excuse, right? We need commitments to keep happening at scale. And beyond that, we need tangible action to happen. We need to turn those commitments, turn the words, turn the paper into actual investment on the ground in projects that benefit sequestration, biodiversity, local communities. And we need it now, right? Carbon and nature are markets that are different than any other asset class in the implications they have for humanity, for species on this earth, and for well-being. So we have to increase our ambition and get to action.
It's incredible to think, even since this group we convened last week to chat through, there's another macroeconomic issue to talk about, SVB. These things are happening rapidly, and they're giving a lot of pause to companies. I think, Uti, over to you a little bit more, if you could, on what is the how of scaling this action?
Yeah, so maybe just building off of what Eric laid out for all of us, even though there has been some headwinds, some macroeconomic headwinds, the fact that we've seen a flurry of corporate action on signing up for SBTI and nature positive action, I think that's a good sign. But I don't know if that's sufficient, right? We have to go beyond the commitments that corporates have made for SBTI and think bigger, for the simple reason that we can't get to net zero without nature. There can be no net zero if we don't tackle deforestation and fix our food systems and reforest degraded lands for native species and all the other things that we need to do to solve nature. But the fundamental problem cannot be addressed unless we create the enabling circumstances for corporates to be able to take that leap and to deploy money. And what I mean by that is shareholders, consumers, the media, they must reward those companies. There must be that ESG premium that we've all sort of been waiting for to be realized through carbon markets. It is the most efficient solution. If we have to scale nature, NBS credits and NCS projects, that's the way to go. But we can't quite get there unless we create the enabling circumstances. And it is my personal hope, and I think for all of us in this room, it is important to see corporates take that leap and be able to do that through beyond value chain mitigation with the enabling circumstances created by the media, by shareholders, by consumers, by everybody in the broader ecosystem.
Absolutely. As Uti is saying, there's this real need to understand the enabling conditions, but where corporates stand in readiness around ESG issues. And I think Morgan Stanley has a very specific framework that you think about these things through and which you evaluate. Maybe, Juliana, you could share about that.
Yeah, absolutely. And, where I said I kind of wear two different hats. And the first hat is from a portfolio construction and design standpoint, how do we look at a company from a fundamental aspect and look at all of its CSG characteristics? And then from a wealth management arm, essentially we're a bridge between our clients and asset managers who are also portfolio constructors and are embedding a lot of information there. So maybe let's start with corporates a little bit. And I think the only way that we can essentially scale this space and this business is to really identify biodiversity loss and climate change as systemic risks and make that active part of our valuation and portfolio construction. Until corporates really make that a part of their day-to-day, make that a part of their metrics and their monitoring, the same way that they're looking at their financial metrics, it's really hard to move forward. But in the case that they do, and not only use that as a risk mitigation opportunity, but actually see it as a way to improve their operations, reduce their costs, go into new businesses, improve their technologies, that's when this is going to really start to change for corporates. And that's just going to be a better way for them to engage with all of their stakeholders, whether that is the shareholders that are, voting proxies and are looking at these things and trying to influence the company. It is from the purview of employees, who I think we mentioned in a couple of panels earlier today, and how, talent retention is very much tied to companies that live through our values. You can think about it from your suppliers and the communities you serve, and we saw a lot of that in earlier panels today. And so that's, you're looking at a company, and then, that company is just a single portion of a portfolio, right? And how are people trying to connect with that? And so the framework that MaryKate mentioned is essentially, we call it the 3 I's of impact. It's intentionality, it's influence, and inclusion. And starting with intentionality is, how are we looking at the metrics? How are we incorporating them into portfolio construction so that we're really focused on the solutions? So where are the companies and the projects that are revenue generating in these technologies? It can be sustainable agriculture, water treatment, alternative proteins, and things of that nature. And then how are we also using that for risk mitigation? So make sure that we're not exposed to sectors and business activities and others that can have, negative impacts on biodiversity and loss. Then there's the I of influence. And so we know that there's no such thing as a perfect company, there's no such thing as a perfect portfolio, right? And so how do we continue to do that active shareholder engagement and dialogue so that companies are improving over time? And then finally, the I of inclusion, which might seem a little more removed from this conversation, but we know that it's not, right? Like, there's a lot of interconnectivity in these issues. Women, minorities are going to be disproportionately affected by biodiversity loss, by climate change, and so how do we also make them an active part of that conversation? And once we do, how do we have the technology to have a conversation around impact? We can't manage what we can't measure, and so it's really, if we are going to be reporting on these different pillars, we need to have the technology to be able to have those conversations and replay back to investors how aligned or perhaps misaligned they are in achieving those goals.
Yeah, absolutely. I mean, this whole event is around forests and biodiversity, and the reality is these are real, tangible things that are actually very human, and the people that live, work, and depend on forests and land for so many things, from livelihoods to sustenance to spiritual fulfillment. There's a whole range of stakeholders out there. And before I pivot to a stakeholder question, I'm just going to say I've not been bored with Juliana. I've been checking the app, and there are 0 questions yet. So this is just a little reminder that we won't do live Q&A from the room for this session. So if you have a question, please start entering it into the app, and we'll monitor it and hopefully get those questions at the end. That goes equally for folks joining us on live stream. Please get in touch with us. But on to stakeholders. One thing that's increasingly clear on this is that we're going to have to collaborate. Corporates have to think bigger and think differently. That's a whole range of skill sets and needs that have to come into this. Alejandro, over to you. I'm wondering if you could share with us, some views around multi-stakeholder initiatives, collaborations, and how those can support scale, but also improved outcomes.
Yeah, and happy to. So, like MaryKate mentioned, and thank you, I work for Commonland. So Commonland's a Dutch-based NGO, and we're focused on landscape restoration work globally. And the approach that we take is to work with local partners. So whenever we're active in a landscape, it means we're supporting local organizations to do landscape level work. And so what does that mean for us? Landscape level work means working across sectors and across challenges. So I think one common denominator here is we have to move away beyond net zero and climate. So it's thinking of that within the landscape, not just thinking value chains. I think, Uti, you mentioned that, right? So how can corporates and investors move away from what is in their direct line of sight within their own value chains, within their own operations, and consider what is happening in the immediate vicinity, let's say, within a catchment, within a valley, within a particular ecosystem, and incorporating that in a holistic, coordinated way. So moving away from project-specific funding and more towards a holistic approach. We have seen that that's been way more successful in having impact that's at a larger scale by definition, but also deeper. And on this deepness of impact, we can talk about the biodiversity piece. We can talk about livelihoods, that sense of community. Something that's important to Commonland is the return of inspiration. So how do you drive that forward? How do you build that ownership by local communities that are working on this for them to continue it, indefinitely. And even if a project, ends for X or Y reason, funding goes away, there's that ownership and that ability to take it forward directly. And I like Midori's point earlier. Something that's critical about working with a landscape approach in a holistic way is the permanence of impact. So again, you can move away, but that biodiversity impact that is happening by working with local communities will remain. So that's what we would be suggesting corporates and investors to push towards and consider.
That's super interesting. I think the way, Alejandro, that you've articulated some of those underlying principles is very helpful. And beyond value chain mitigation is something that's come up already twice today, and I think it's something, Rahul, that you're thinking about quite a lot as well. If you could maybe share some of Salesforce perspective, both how others can go beyond their value chain and maybe even how you are yourselves by helping other corporates.
Absolutely. Thanks, MaryKate. Just want to echo a lot of what Alejandro mentioned. At Salesforce, we announced a commitment to being net zero across residual emissions for scopes 1, 2, and 3 in 2021. And similarly to Uti and to Juliana, we see the carbon markets as essentially a very efficient instrument for channeling finance to amazing projects around the world, to include local and indigenous communities in climate finance and climate action. And to what Alejandro mentioned, not just thinking about net zero and working towards sort of a broader climate action globally, but also a nature positive future and developing sort of a vision for how corporates can build out nature positive strategies. So at Salesforce, we'll actually be publishing a nature positive strategy next month. Our nature team characterizes nature positivity essentially similar to where net zero was 5 years ago. There's a lot of ambiguity and sort of uncertainty around what that means for an organization, and a lot of, I think, what our sustainability team has done through our own portfolio is really think about creating some certainty around achieving our commitments, but also how we can create sort of structures that other organizations can build on and sort of tap into. Particularly on collaborations in BVCM, there's probably one particular group that I think Salesforce really, we both find a lot of value sort of within. So we're a co-founder of the Business Alliance to Scale Climate Solutions, BASCs. Really wonderful group of companies that comes together in a really open and kind of collaborative exchange, both strategically around programming and initiatives in climate action, but also tactically. So really open questions around contracting, due diligence of new projects. How can we all learn together and from each other? Secondly, from BASCs, we're also starting to think about collaborative financing opportunities. So knowing how complex and how difficult these projects are, how fast and dynamic this space is, and how fast things are moving, can we learn from each other to navigate climate and nature opportunities, but also come together in a collaborative way to finance BVCM, or beyond value chain mitigation?
Yeah, definitely. The word that stuck out to me as you said, Rahul, was ambiguity. You ever see a job ad that says like handle or works well in uncertain situations or works well with ambiguity? I think we all need to put that in our job descriptions because we've been living in it for years now, and in a very complex, complicated, and rapidly evolving situation where there still seems to be another layer of ambiguity next. The more we know, the less we know. Juliana, I know in your role needing to educate and work with investors on a range of complex issues comes up a lot. Can you maybe share with us a little bit about how we can not only better educate ourselves and get used to this ambiguity, but also help move the market forward to continue to invest and put capital to work despite ambiguity?
That's a really great question, and maybe I'll start with the latter part of that, which is, how do we get to really scale this? And then I can talk about education. But when we think about scale, it's really embedding this everywhere, right? Like everyone that's in this room, from your particular fields, you are the pioneers in a lot of these technologies. But what we fail to sometimes we fail to realize is that everyone needs to play a different role. And so if you think about, foundations, university endowments, and what we call like impact first clients, who are more interested in the impact that an investment is having versus necessarily their financial returns, they have been the pioneers, they have been leading the charge, they have been the ones that are, using active shareholder dialogue. They have been the ones that can kind of go and take the time to invest in these new things and kind of take the risk on behalf of the larger population as the rest of the population tags along. Then you have folks like the corporates who, as I mentioned, need to embed this into everything that they do. But they also have a very important role to play because they manage the corporate retirement funds of all of the employees that they serve, right? The average pension plan has 33 times more carbon intensity than even business operations themselves. And that is a huge responsibility in the way in which we are, decarbonizing those portfolios, and that we know it's going to engage better with their plan participants and their employees, right? Within folks who know that there are sustainable options in their pension plan, 60% of them know about it, and then 9 out of 10 of those people choose them actively for their 401k plans. Of those who don't know that those exist, 70% of them say that they're interested in having better and more sustainable options in their pension plan. And so it's a double-edged sword of like how, or double opportunity of how corporates can engage there. I come from a financial institution. We have a very, very important role to play there, right? As market makers and as connectors. We hear what our clients are interested in. We see the technologies that are out there, and then we need to go engage with asset managers and voice these demands, voice these concerns to make sure that as the space continues to evolve, there are more and more sophisticated products out there that deal with these things. And then last but not least, all the retail investors, which I would put in kind of like a movable middle place, right? Where whether through their pension funds or whether through their investments, right? They're just trying to incorporate their values into their investments the same way, right? Like we all believe in something. I'm sure, many of you may ride an electric vehicle, or, I see a lot of reusable cups around here. We embed all of these decisions into our day-to-day. We can also embed these decisions into our investments. And I think that's a big piece of how we can really continue to grow this. From a, asset class, portfolio construction perspective, not all asset classes are created equal. Right? There's different things that we can do with different portions of our portfolios. In the public equity space, I think what we're noticing is, climate remains the #1 issue. A lot of like biodiversity and nature-related themes, right now are being kind of more embedded into that umbrella, and that's just because the space is more nascent. But I think over time, and again, that is going to continue to get more sophisticated, more evolved, and there are going to be more options there. Fixed income is a space where you can have a lot of kind of on the ground direct impact. If you think about sovereign debt, like where are the places and the countries that are the most exposed to biodiversity loss, like Peru, like Brazil, like Argentina, right? If you think about it from other types of like municipals, same way, they can be leveraging green, blue, social bonds to finance these projects. And then you have all the private markets, your private equity funds, venture capital funds, funds of funds. And they, kind of similar to foundations and investors, they're the ones that can like push the needle and like really try and find a lot of these projects with a lot of targeted impact. And then in terms of education, it really all goes back, I think in my mind in many ways, to the impact reporting. Again, if we don't have a way to know where the bar is, there's no way for us to know if we're moving towards our goals or if we're not. And so being able to make that a very active part of the conversation is really, really important. However, data is something, it's been talked about a lot today and tomorrow, but this is one where we still need to have a lot more, better systems, better tools, more evolvement from the data itself so that the tools themselves can tell us the insights and give us the better stories to really influence our investment decisions.
Yeah, and thank you for bringing real numbers to this conversation. I scribbled down some of the stats you gave, which are shocking. And I'm going to go off script so we can flip them back at the audience for a quick second. If participation, because there's still 0 questions. How many of you know if outside of not your job, your personal finances and investments, how many of you know if you have sustainable investments, whatever that means to you, included in those? Excellent, okay. Well, keep your hands up still. How many of you know if they're in your 401k or pension or retirement? Yeah, okay, so 401ks and pensions are still lagging in those kind of options, and or we just don't log into the system to see what the heck the default was. Okay, interesting. Eric, I wanted to pivot to you with another phrase that came up recently, which was impact first. I know this is something Manulife has been a leader on, to go ahead and think about scaled impact first investments. Do you mind give us an example? And I know that wasn't the question, but I'd rather hear about that.
Yeah, no worries.
Yeah.
And that actually kind of pivots
Yeah.
from Juliana's discussion pretty nicely, because the key question for corporates, for investors is, are there investable options, right? And underneath that becomes everything Juliana talked about, from the data, from the impact reporting, from the risk return analysis. And we're at a forestry conference, so let's focus on forestry. Forestry, kind of is the poster child for nature-based solution investing, right? It offers the optionality to manage a productive underlying asset in a working forest, in a reforestation or afforestation opportunity, in a protection scenario, where you can have multiple avenues to realize value, right? You have traditional sustainable timber on one end, and then you move up the curve toward carbon neutrality, toward more intentional carbon sequestration and crediting. And you can also layer on other impact, like biodiversity. So for a tangible example, we have a number of carbon projects that we manage on behalf of our clients within a traditional sustainable timber management regime. We've also now expanded, as I mentioned, to the Forest Climate Fund, which is targeting carbon sequestration as that impact focus. And on the biodiversity side, we see opportunities as well already in existing markets. So for instance, we're developing a gopher tortoise bank in Florida on one of our client properties. We have the ability to provide a forever habitat.
What's a gopher tortoise bank? Can you explain what you mean by bank?
Yep. So gopher tortoises are a threatened species in Florida. They dig deep burrows, and about 300 other species really rely on the gopher tortoise. And so they need sustainable habitats for which they can prosper and continue to thrive. And so on some of our client properties, we have ecosystems that are applicable and really very much the right ecosystems for gopher tortoises. So we're setting up sites on about 1,000 acres to take about 1,300 gopher tortoises. And through that action, one, we provide that sustainable habitat, we provide biodiversity benefits, we maintain that ecosystem, and it can generate substantial income for our clients as well. So you've got this win-win situation. And we're looking to do that kind of work where it's applicable across our client portfolios to drive those additional benefits beyond just traditional sustainable timber practices and even carbon, which is so often kind of the first stop as we think about impact for forestry.
That's awesome. I'm picking this up, but I'm also apologizing for chastising you, because there are 2 questions and my app was just not refreshing. So 2 is good, 4 would be better, but we'll get to them too. So I love that, Eric. And the gopher tortoise is a great one, because it's something that we can find across a lot of lands that allows us to still have productive land management, but right in concert, producing timber and other goods in concert with active biodiversity conservation. Super cool. On that note, Uti, sorry, I've been keeping you quiet in the middle here, but I love this example of real-world nature-positive action. Can you maybe talk a little bit more about what you're seeing that's cool, what comes across your BP desk that's nature-positive?
Sure. So I think we spoke a little bit about beyond value chain, but maybe just coming into the value chain itself. Let's not forget the SBTI flag guidance. So starting with maybe the flag, which is forest, land, agriculture, businesses, it touches the land-intensive sectors, and is responsible for about 22% or so of GHG emissions. So all of these companies that fall under that flag guidance would be required through insetting or offsetting to meet their SBTI goals. So I think that in itself is a great sign for companies to take action on anything that touches nature. I think second example would be, we saw this in the press towards the end of last year, was a huge transaction by a peer of ours, Hess Corporation, for the purchase of Art Trees credits, about 37 million tons in total, $750 million. So a huge transaction there. Obviously pales in comparison to what you compare with flag. If you think about the number of emissions that could be, it could be hundreds of millions of credits, of carbon credits, or related activities that could generate those credits, but that's the amount of money that would likely flow into the sector if those companies were to start taking active steps to manage their SBTI compliance. I think a third example would be closer to home. So BP is the only private sector participant in the World Bank's Forest Carbon Partnership Facility, which is this public-private partnership. It's about 800 million, about $1 billion in total size, where we've supported 15 countries around the world to set up their RED Plus programs, and we're exploring ways in which we can bring other corporates along and share those learnings, or potentially figure out ways of setting up further multilateral programs like that. And then I think we've talked a little bit about biodiversity credits, so I won't belabor the point there. But just to say that it is actually very encouraging to see Salesforce step up on the nature positive side, because my example would have been of Netflix and the work they've done around SBTI plus nature. But I think if more companies step up to do the same thing, we could see more of that flow into that space.
Totally. And if there's any greenhouse gas removals nerds in the crowd and not just on the stage who want to talk about flag and the way that carbon removals play into that, Eric's colleagues and I and some others in forest industry and partners have been really working very hard to make sure that carbon removals get appropriately included into a revision to the greenhouse gas protocol, which will be essential for flag to work. If that's important to you, I'd say find one of us and we'd be happy to chat, because we need a lot of partners to make sure we can leverage the power of carbon removal in forests for these targets. Let's go over to you, Alejandro, for a last question before we address some of these great audience questions that have come in. Nature positive, I'm going to kind of ask you to tag into a question that's here as well, though. So as we think about nature positive, if you could also touch on a question we've got here from Cameron Von Brett, which is measurement of biodiversity is critical to this process. However, scalable and holistic approaches have always been too costly and take decades to document, which is why most of our data is based on habitat and key species. What biodiversity measurement tools are you considering investing in? And I'll let others chime in on that if you want, but I think, Alejandro, for you, as you speak about nature positive, could really kind of focus on the role of biodiversity measurement within that and how the heck you get it done with multiple players.
No, I think that's a great question, and something that touches on one of the examples that I wanted to give. So there's this amazing landscape initiative in the Sierra Gorda landscape in central Mexico, led by Patti Ruiz Corso, very inspirational woman. And they are the quintessential community-led, holistic, landscape-level initiative. It's civil society co-managing protected area together with the federal government. And they have a lot of work, and some of the examples with green gold forestry also came up. But it started as an environmental education initiative. And then it expanded into supporting conservation activities and into supporting micro SMEs, payments for ecosystem services, and going to each individual smallholder and setting them up so they would be able to receive contributions. I mentioned that because they have a RED Plus project, and the way in which the monitoring and the MRV process was set up was very difficult for a small organization that's community-led to take on. And as a learning, they then developed, which is an amazing example, a methodology that worked for them specifically, and then got it verified and certified by international standards, and now they're going out there and doing amazing things with it, with Mexican corporates in their own state. And the way in which they're tackling this approach is working with the local community specifically and local farmers to engage them and change their practices, management practices, so that they become part of the team who are collecting data, doing the conservation work themselves, and they're getting compensated for it. And so this is maybe not an example of on the digital side, although I think that's probably where we're all going to be moving towards, but a way in which local communities can be engaged and benefit from that very much in a direct way.
Very cool, like citizen science or citizen conservation.
Yeah, data
Super
monitoring, doing the work on the ground themselves, with support from this organization.
Very cool. Rahul, if you're okay with it, I'm going to ping one of these audience questions to you.
Sure.
Because I know Rahul has a background working for the African Development Bank in addition to his current role here. So Diana Doheny asked, there is an extraordinary amount of potential nature-based solutions in West Africa and the greater continent. What has to happen, i.e. risk perception, structure, technology, et cetera, to entice investors to engage in opportunities there?
Wow, what a great question, and if I could answer that, I would have my entire year's KPIs figured out already. But yeah, actually it's been really a very exciting journey for me at Salesforce. I joined the team in September for the last 6 months, just thinking about mainly our carbon credit portfolio to date, but in terms of, and sorry MaryKate, I missed this earlier, but in terms of the theme of corporates thinking bigger, we are constantly exploring new financial instruments and opportunities that we can align to our climate and nature action that may be decoupled from our carbon credit portfolio. And for some of these opportunities, these are things that we could look at in-house. So whether that's upstream financing of new projects or investments into funds, but there's also I think there's a lot of synergy with some of the thinking that Eric's doing at Manulife and Uti that have deep teams and specialized knowledge around these types of new investment vehicles. And I think one thing that we'll be exploring more and more is how we can work with a lot of specialized intermediaries for nature and climate impact. In terms of structuring, when I was at African Development Bank, I was part of a team that had public finance that could be quite malleable, and essentially the entire objective or thrust of that team was to de-risk and catalyze private investment. So whether that's providing junior equity into a fund, or very low cost or long-term debt that otherwise wouldn't be available in commercial markets, that could actually incentivize private and large-scale capital to come in. Now it's very interesting to be on kind of the other side of the spectrum where there's the commercial capital that sometimes requires that additional de-risking. So I would say DFIs have been doing a lot of this, African Development Bank, ADB, I think in Latin America probably IDB has been doing some really interesting de-risking work for funds themselves. In terms of long-term purchase agreements, guarantees that we might see in a utility-scale renewables industry that are not yet broadly available in carbon markets, I think could be a new frontier. Probably some groups that are already looking at those types of structures. But I feel like those are great places for public finance and or philanthropic capital to plug in that would make a lot of these more ambitious, riskier, relatively new types of transactions more palatable for commercial investors.
Absolutely. I mean, coming from someone who's had an ESG role for a long time, I really do view ESG risk as an opportunity for the risk to be managed, to flip that around, to de-risk the asset, to make it more valuable, and to create more benefits all around. So I would just add to that, I think with not only needing to have all the remote sensing and technology experts we have today and the very much in-demand carbon accounting and project development expertise, we need to be cultivating a pool of social experts, stakeholder managers. We need to have common lands, in every jurisdiction operating at scale so that we can scale the assets around it. Because I think, Joan, you probably agree, if you can't manage the ESG risk, the money is not going to flow there. You need to turn it around into a livelihoods opportunity, biodiversity opportunity, et cetera. Just looking at the time, because we did a great job getting a few quality questions in from folks, really quickly, to address one without long responses, for the entire panel, Significant overlap between carbon credits and nature credits. How do we manage the risk of double counting benefit to nature or climate when pricing in these markets? So first off, we'll just maybe do hands with it. Totally okay to stack climate and nature? Yes?
Yes.
Hands up. Oh, we have a dissenter, so I'm going to ask you real quick, why?
We'll stop back.
Let the market price it. Okay. All right, that's a good one. Do you think it will come out in terms of pricing of the carbon credit if there's nature stacked on it? Hands up if yes. Was that an intelligent question? Will credits be higher value if they've got good nature benefits as well? Fun.
They already
Yes.
are.
Yeah.
Yeah.
Yes. Okay.
We're
Cool.
already seeing co-benefits.
Cool.
Yeah.
Okay, well, I apologize to Anonymous for not giving that question the full due time it deserves, but it's currently 2:45 local time, and I'm going to take one more minute because Haley's not going like this yet. So with that,
Mary-Kate, can I just add
Yeah.
something to that? So just, no,
Excellent.
to be clear, we would have to make sure that that credit is additional, yeah? So assuming that it's additional and that the capital that's coming in from the nature side is stacked in a way that either addresses a different need or is a different claim associated with it, I think that's all okay.
Yeah.
Obviously, you have to ensure the integrity of the system,
And
but stacking in a way that done properly is fine.
stacking with integrity and additionality, it sounds like, Uti, you're on board with the first panel today mentioned that biodiversity credits should be generally more oriented toward achieving nature positive outcomes rather than offsetting a negative nature impact.
Yeah.
Yeah, cool. All right, so as promised, there's going to be a proposed final question to everyone, and if anyone wants to count their words, I told them 10 words or fewer. Okay, what will corporate climate and nature action look like in 2030? You can be optimist, you can be pessimist, you can be realist, but what's it going to look like in 2030? And I'm going to jump around. Juliana. Sorry.
I'm hoping as sophisticated and as embedded into everything as climate is now.
13, did anyone count? Pretty good, pretty good. I like it. I approve of the message, thank you. Rahul, what about you? What will nature and climate look like in 2030?
I think I tend to be optimistic. I would say massive, collaborative, and inclusive.
I sure hope so. Awesome. Alejandro?
Echo those, local ownership and embedded in everyone's operations.
I'll say optimistic response, but with a caveat. So the corporate climate action would corporate climate action and nature investments would become second nature, like we have ESG
Nature.
or D&I investments, but possibly with the same challenges that we've seen on ESG investing.
My new company will be called Second Nature Squared. Second Nature. Great. Cool. Eric?
Yeah, I'd say more standardized, transparent, absolutely additional, and from a corporate standpoint, non-discretionary.
Absolutely. All right, so I think we are just coming at the top of our time. I'm going to ask folks in the room if you at all possible can stay, because we're now moving on to a 30-minute session with Phil Cottle from Forest Re. We'll be up next. We're just going to do a quick switcheroo, so stay tuned. Thanks, everyone, and thanks to our panelists.